guys, it's Stock Curry, and today I'm going to tell you what's going on in the markets, why they were down on Monday, but good news is I do expect a big green day on Tuesday. I also have an update on the cryptocurrency markets as well as a few stock picks for you guys, so let's get into it. Now, the stock markets were down quite a bit today. We had the S&P down about 1.5%, the NASDAQ was down about 1%, and the Dow was down almost 2%. Now, I've been talking about this upcoming market correction for a while now, at least a week and a half. So hopefully you were able to buy some hedges in your portfolio and make some money today. I was extremely blessed to have my portfolio up over 10% today. So the question is, should you be buying right now, or maybe just holding, or should you be selling? Like, what should we be doing right now? Should we be waiting for a further drop? Are we going to rebound from here? What's going on? And the answer is we should probably be doing both. It's really going to be stock dependent, meaning there's a lot of stocks right now that are oversold that are great buying opportunities. There's also a lot of stocks that remain overbought that we need to wait and be patient for them to come down a little bit more before we jump in and buy them. But just a warning is I do not recommend using margin at all right now. The problem with margin is while a bull market, margin will greatly increase your profits. In a bear market, margin will greatly increase your losses. So I don't recommend using margin right now. I would just be using the cash in your portfolio. And actually, I would hold on to some cash as well. I'm actually holding about 10% of my portfolio in cash right now, waiting for this correction to bottom out so that I can then buy some dips and get some good opportunities. Now, currently, about 20% of my portfolio is made up of bearish positions where I'll make money if stocks go down, and about 80% of my portfolio is made up of bullish positions where I'll make money if stocks go up. Now, regarding whether or not this is just a correction or if it's a full-on market crash, I think for right now, this is just a correction. I don't think we're going to get a full market crash until, say, September at the earliest. We'll have to see something major happen in the economy in order to trigger an actual market crash. That could be something like a full shutdown due to the Delta variant, or perhaps the Fed raising interest rates, or inflation getting out of control, something like that. But until any of that happens, for now, I'm just going to call this a correction. I think we're just going to get a small pullback of maybe 7 to 10%, and then we'll be right back to the races again. But again, if any of those factors come out and the country shuts down or interest rates rise or inflation gets out of control, if any of that happens, then we will be in the very beginning of a crash right now. Unfortunately, nobody can predict the market. Nobody knows for sure. Nobody can time the market. We won't really know what this is until it's all over. But for the very, very short term, at least for Tuesday, I do expect a big green day on Tuesday. I've got the green shirt on. I got the green lights in the background. I expect a big green day on Tuesday. I do expect us to rebound. The futures are up about 0.5 percentage point right now. So I think we're going to rebound off of today's Monday's sell-off. All right, let's get into our stock picks. Now, for those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. Every day, I spend hours watching videos from the top 10 YouTubers, and then I consolidate all of their stock picks into a single video. I also give you my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and click the bell icon, and then click all so that you can get notified when I release my next video. And if you're watching this on Facebook, go ahead and follow the page also. In fact, I'll give you 5 seconds to do that right now. Alright, before we get to today's stock picks, I just want to remind everyone that I am not a financial advisor, and none of the YouTubers I analyze are financial advisors either. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. Alright, let's get into today's stock picks. And the first thing that I want to cover are the crypto markets. The crypto markets are looking very bearish right now. Bitcoin is back below $30,000 for the first time in nearly a month. The chart is looking very bearish right now, and I do expect Bitcoin to drop down to $24,500 soon. After that, our next levels of support will be $19,500 and $12,500. But for the time being, I think $24,500 will be the bottom for Bitcoin, unless we enter a huge crypto winter. In that case, I think $12,500 will be the bottom. Ethereum is also struggling, with it now back down to the 300-day EMA. This might actually be a buying opportunity on Ethereum, but I'm not 100% sure. We'll have to watch it over the next couple of days and see if it bounces or see if it's going to continue to drop further. Okay, now let's get into our stock picks, and first up is AAPL. This is Apple. Stockmo said he bought AAPL on Monday. It should be noted that AAPL was Stockmo's viewer's choice and is not necessarily Stockmo's stock pick. Technically, AAPL appears very bearish right now, with the candles dropping, the RSI dropping, and the MACD histogram dropping, and the MACD about to form a death cross. I actually have a bearish call spread that I sold in AAPL that I'm up over 50% on. If you're looking to buy AAPL, then I would recommend waiting for it to bottom out before buying in. In the long run though, AAPL should perform well. The average analyst 1-year price target is $163.76, which represents a 15% upside potential from Monday's closing price. Stockmo also gave a $200 2-year price target. Keep in mind that earnings are coming up next week, so that could significantly affect the stock price. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV manufacturer. CCIV is set this Thursday, July 22nd, as the official shareholder vote date for the merger with Lucid Motors. Once the vote is approved, the merger should happen the next day. So please don't forget to vote if you are a shareholder. Larry Jones showed some polls that are predicting CCIV will get to between $104 and $139 within 4 years. But in the short term, he thinks there will be a sell-off after the merger happens on Friday. That could correspond with the current market correction that we are in. Larry Jones is considering buying more CCIV next week though, after a short post-merger sell-off. Next up is CHPT. This is ChargePoint, and they are the largest charging station company in North America with 73% of the total market share. Keenan Grace has been playing a put option on CHPT ever since it was overbought a few weeks ago. He now said it's time to convert CHPT from a put into a call, and I agree. CHPT looks like it has bottomed out. The RSI is now rising, and the MACD histogram is rising as well. CHPT was also up quite a bit in the after hours. I saw the same thing Keenan Grace saw, and I bought a $25 August 20th call option on CHPT on Monday. I'm already up over 7% on that option in just a few short hours, and I do expect it to continue to perform well over the next few weeks. By the way, if you want to know everything I'm buying and selling, I post all of my buys and sells within minutes of making the trade on Twitter and Facebook. You can follow me on Twitter and Facebook at RealScottCurry. Next up is CLSK. This is CleanSpark, and they're a solar energy company. Chris Zane said today's dip on CLSK was a buying opportunity. CLSK is oversold with the RSI all the way down to 26. But the MACD continues to be bearish and the candles continue to drop as well. So while it does look like CLSK is near a bottom, I'm not 100% convinced that the bottom is here yet. I would like to see some rise on the MACD histogram or for the candles to close above the 10-day EMA before I bought in. Despite being oversold, there's still too much risk that CLSK could drop further. But you might want to get this on your watch list as a potential buying opportunity for later this week. Next up is COIN. This is Coinbase. This is a platform that is used to trade cryptocurrencies. Stockmo said he would most likely buy COIN on Monday. He likes how COIN is back down to near all-time lows. Stockmo is considering either shares or leap call options. I've said in past videos that I really don't believe in Coinbase with its current pricing structure, but that I felt like $200 would be a good buy-in price for the stock if you're interested in it. We are pretty much there now, so if you like Coinbase, then I think now would be a good time to start dollar cost averaging in on COIN. I will warn you that technically, COIN is still very bearish though, so there's a good chance that it will continue dropping lower. I'm not sure how low it might go, but $200 seems reasonable. In the long run, it looks like COIN might perform well. The average analyst one-year price target is $336, which represents a 52% upside from Monday's closing price. Next up is DIS. This is Disney. Keenan Gray said it's time to start loading up on DIS. Technically, it's definitely too early. Now in the short term, if DIS drops down to $169, then you might want to think about DIS for a short-term play. I'm torn on DIS long-term though. I think DIS should be trading closer to $135 at this point. My concern is that a major market correction is going to send DIS down to between $135 and $140. So while you might want to consider DIS as a short-term play if you can buy in around $169 or $170, I would hold off on buying DIS as a long-term play until after we get a true market correction. Next up is JMIA. This is JMIA, and they're an African e-commerce company similar to Amazon. Chris Zane likes JMIA for a swing trade with a 10 to 30% profit potential. JMIA does look like it may have bottomed out here. The RSI is flattened out at nearly oversold, and the MACD histogram is rising. I agree with Chris Zane that this would make a great swing trade. I would set my take profit at anywhere from $30 to $33 on this play, and you'll probably be holding JMIA for about 3 to 4 weeks before it hits your price targets. Next up is WHR. This is Whirlpool. Jeremy with financial education likes WHR for a dividend stock. WHR is reporting earnings on Wednesday after the market close. Jeremy with financial education said that if WHR drops after earnings, he would consider buying WHR for his dividend portfolio. The dividend yield is currently 2.64%, but could rise as high as 3% if the stock sells off after earnings. And last we have ZM. This is Zoom. This was a favorite play of many retail investors during the pandemic, but it has since cooled off quite a bit and has nearly been forgotten about. Well, Tom Nash just let us know about a merger that ZM announced where they will be buying Five9 for $14.7 billion. Five9 is a fast-growing cloud-based software solution for customer service departments. Five9 uses data analytics and AI to optimize customer service. With this acquisition, ZM will get Five9's customer list, a lot of future growth potential, and the potential to get back into the spotlight. If you want to know more about this acquisition, I recommend you go watch Tom Nash's video that he uploaded Monday. Now regarding the ZM share price currently, I don't think it is quite the best time to buy in yet. ZM is still looking bearish on the RSI and MACD, so it looks like it might want to continue dropping. Therefore, I will give you a $345 buy-under price, a $325 ideal buy-in price, and a $270 stop-loss price.
Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. And if you're not a US resident, or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have commissions-free trading in the United States, and they have highly discounted trading everywhere else in the world, with commissions starting at just $1 Canadian, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do have material connections with both Webull and Interactive Brokers, so when you sign up for either one of those using my links in the description below, not only are you going to get a great broker to trade with, you're also going to help me to continue to produce these great videos for you. Now, don't forget to hit that like button, subscribe, click the bell icon, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.